All right, I got to start over here. All right, we're having fun this morning. So we got to start from scratch now that we're 6 minutes in. All right, starting the whole monologue over again. Thank you, everybody who stuck with the channel for a while here. We're going to go ahead. We're going to take me off the screen because my picture is out of whack here. So it was looking like a slow news day. Now I'm starting over. I got to remember you guys didn't hear anything I said. It was looking like a pretty slow news day when I got up this morning and I had my phone call with Mish. And then I saw this story hiding in Market Watch about these comments that Microsoft CEO Satya Nadella made. All right. And you got to scroll down. You got to pass the fold. It's not even the top story on Market Watch, but this is potentially a huge story this morning. All right. Microsoft CEO was on the BG2 podcast. I've never even heard of this podcast before. And apparently this was a couple of days ago. I'm just getting wind of it now. But he was asked about supply constraints. And you guys know the story about supply constraints, right? The narrative. We've all heard it. Demand is insane. We can't build them fast enough. The chips are overheating. Oh, but everybody still wants them. Never mind the fact that the H100s are being dumped on eBay, shipping from China. How they got there, nobody knows. It's supposed to be illegal to sell them there. Supermicro's accounting fraud, all that stuff. I have beaten these topics to death. All right. But then he's on this BG2 podcast the other day, and he's asked about supply constraints. And he says, Microsoft has plenty of chips and now needs more power. Here's the story right here. Let's just get right into it. Nvidia stock is in a correction. Microsoft CEO may have just said something very worrying. He's saying we've got plenty of chips. Let me read you this line here, guys. We're going a little out of order today because my sound issue threw me off. Thank you, Jen, by the way. I did get the call. Microsoft has plenty of chips and now needs more power to fuel them. And guys, read those first 5 words there over and over again until it sets in on what that means. Microsoft has plenty of chips. That's according to Microsoft's CEO. And if you didn't read that and say, holy shit to yourself, you haven't been paying attention for the last 2 years and the implications of that. An $18 trillion stock bubble has inflated around this Nvidia narrative and the fact that there's just insatiable demand. No matter how many we build and sell, we'll never have enough. The estimates have been ridiculous. Quadrillions of dollars in market share by next Tuesday. All these silly comments and price targets arbitrarily raised just because numbers go up. Microsoft has plenty of chips. That's huge. I mean, I'm 5 words into the article and I'm already going, whoa. And now needs more power to fuel them. Now, the power issue we've also talked about. We've talked about FERC rejected some of these private deals that nuclear plants are trying to cut to sell power directly to the consumer or directly to the data centers, cutting out the middlemen. Power is a real issue. They're building these data centers. They use more energy than entire cities. And where's that energy going to come from? I don't know. Ask the people who spray paint works of art where we're going to get the energy from. I'm sure they have some wonderful ideas on how to power this silly bubble. But these comments made by Satya Nadella, Microsoft CEO, in a recent interview with the BG2 pod, and Brad Gerstner and Bill Gurley, he said, power, yes, I am not chip supply constrained. There it is again. All right. So we started with Microsoft has plenty of chips. And now he's saying, I am not chip supply constrained. This is the CEO of Microsoft. All right. Does this sound like insatiable demand? Right. That guy in the leather jacket. And, he gives all of his TED Talks and he wanders onto the set at CNBC and he talks about how insane demand is. I am not chip supply constrained. Microsoft has plenty of chips. The implications of this story are massive. All right. And this is a couple of day old podcast. I got to go back and watch the whole podcast. It's like an hour and a half long. I just caught wind of it this morning. But oh my God, if this is accurate, and if this isn't just unique to Microsoft, if Facebook is in the same boat, if Amazon is in the same boat, I mean, CoreWeave, whatever they're doing over at CoreWeave, who cares? Wow. Microsoft is believed to be one of NVIDIA's biggest tech giant customers. NVIDIA reported in an SEC filing this summer that sales to a single unnamed customer represented 13% of its total revenue in the first fiscal quarter of 2025. That's according to Timothy Arcuri at UBS. Nadella discussed what happened during the initial ChatGPT AI boom of 2022 as they bought all over the place to try to catch up and prepare for the demand for those AI services. And that is a one-time thing, and now it's all catching up. In other words, guys, the mad dash, the scramble to buy as much as they possibly can is over. Or at least for Microsoft, it's almost over. Maybe that's the more optimistic way to look at things. But the implications of this are massive. And I can't believe I'm just hearing about this from a Market Watch article. Microsoft has plenty of chips. What a striking contrast to the narrative you're going to hear anywhere else. All right, now let's talk about this in the context of some of these other NVIDIA stories. NVIDIA falls deeper into correction territory as Broadcom rally continues. Now, the NVIDIA correction, we'll look at the chart. Maybe there's a thing there, maybe not. I'm not making a big deal out of NVIDIA. It's fallen like $12, $13 in the last couple of days. All right, when I see NVIDIA stock fall $50, all right, I'll be impressed. But when it falls $10, $15, not that big a deal to me in the short term. NVIDIA shares fell in pre-market trading on Tuesday as Broadcom continues its rapid surge higher. NVIDIA stock was down about 1.8% in pre-market trading. On Monday, the company entered correction territory, broadly defined as a point when a stock falls 10% or more from an all-time high close. NVIDIA has done this recently as well. In a tale of two chip stocks, Broadcom shares were 1.9% higher in London pre-market trading. Over the past 5 days alone, Broadcom shares have rallied 40%, while those of NVIDIA have surrendered 5%. Broadcom's specialty lies in custom AI chips that the company is developing for hyperscalers, which are large cloud computing companies. We've seen an opportunity over the next 3 years in AI, Broadcom CEO Hock Tan told investors during the company's earnings call last week. Massive specific hyperscalers have begun their respective journeys to develop their own custom AI accelerators. So this is another facet of the story. Never mind what Nadella said about having enough chips. You've also got Broadcom is playing catch up. That three large hyperscalers, which in my opinion is almost certainly Microsoft, Meta, and Amazon, have hired Broadcom to make their own custom chips at a time when Microsoft is saying we probably have enough. Guys, the AI, the GPU market looks like it's becoming commoditized here. And if they're going to commoditize this market, then you better believe the premium that NVIDIA has been trading at is going to collapse big time. It's not happened yet. I'm not looking at a 10% correction in a stock that's up 160% year to date and saying the end is nigh. But there is some very worrying signs here for the NVIDIA shareholders. Now, here's the chart of NVIDIA. All right, here's the correction they're saying, right? Here's your all-time high close up here. Let me make it more accurate. Here's your all-time high close. Here's where we're at now. Yes, technically it isn't a correction. We're down 10%. But besides that 10% level, what worries me more is the shape of this chart. Looking at daily candles here, it's looking like a little bit of a head and shoulders, which is a reversal pattern here. All right, again, if we zoom out, let's not get way ahead of ourselves, right, guys? Let's zoom way out here at this chart. And this is going back to 2022. Hardly anything to freak out about. But that is a little bit worrying, and the context from Nadella big time this morning. Also, look at the Broadcom chart. Oh, wow. Like up 40% in a couple of days after that earnings release. All right. This is the market saying Broadcom is eating NVIDIA's lunch. That's what that is. So between Broadcom eating NVIDIA's lunch and Microsoft CEO's comments, there's a lot to be worried about for NVIDIA shareholders right now. Okay. Maybe this is the end of the AI mania. Maybe not. But Microsoft has enough chips. You better believe that's an indicator that there's some big trouble ahead for this bubble. All right, now we kind of blew through because of the sound problems I had this morning. Tech issues are so fun. Got to love that. I was talking to myself for 6 minutes. But let's go through markets since we're going out of order this morning. The S&P 500 is down 20 points, 0.33% lower ahead of the opening bell. The Dow is down 179 points or 0.41% lower. And the NASDAQ is down 51 points or 0.23% lower this morning. Meanwhile, the DXY US dollar, it's at 106.87. It's currently up only 1 basis point. We were a lot higher earlier this morning. We were briefly above 107. But the strong dollar could become a problem in the future, guys. We're looking at a euro that's weakening. We're looking at a yen that's continuing to weaken. We got stories this morning about Brazil is weakening. Keep an eye on that DXY. Also, right now in the bond market, we got a mixed bag. The 30-year Treasury, 4.593. That's down about 1.5 points. The 10-year, 4.401, down 0.5 point. The 2-year, 4.264, down 1.5 points. And the 1 month, 4.310, pretty much unchanged here. By the way, guys, it looks like a Fed rate cut at 4.31 for the 1 month. The Fed rate cut is pretty much fully priced in here. The Fed is expected to cut their rate tomorrow to 4.25 to 4.5. Looking over at the CME right now, it looks like a 97% likelihood that the Fed cuts 25 tomorrow. So that's pretty much fully priced in at this point. Looking over at the commodities board, we've got gold is down $17.67 here, about 0.2% lower at $26.35 for spot gold. Spot silver down again this morning, $30.30, down another 22 cents or 0.75%. I still like the shiny though. We've got copper is 1.2% lower, platinum down by about 0.6%, palladium's down 1.75%. And WTI is moving lower this morning. Also, crude oil for January of next year, delivery 69.60. That's down about $1.14 or 1.6% lower here. Meanwhile, Bitcoin continuing to grind higher, a new all-time high, $107,476 for Bitcoin. It's up another percent and change this morning. Look, guys, we're in a FOMO rally. Any way you look at it here, my gut tells me this rally has more legs. It could go higher for a while. It's still here. Just be careful, guys. Don't go out on leverage. Don't borrow money to buy Bitcoin. Don't put Bitcoin on your credit card. All right. The last one in is always the one to get ruined in a bubble. I'm not saying the next guy who buys is the last one in. FOMO rallies are notoriously difficult to predict, but they do end. Always, now and forever, FOMO rallies eventually end, and the last guy in gets clobbered. So, just be responsible. Be careful with your leverage. We've been here before. Maybe this goes higher. My gut tells me it is going higher, probably a lot higher. But just manage your leverage, guys. Don't be a Michael Saylor. Don't mortgage your house and buy Bitcoin. Just be careful out there. That's all. Also in the commodity space, something to keep an eye on. Third tanker in trouble as oil washes up on Russia's Black Sea coast. They're showing this picture here on screen. It was your classic, the front fell off yesterday in the Kerch Strait. Yesterday, 2 Russian oil tankers basically wrecked. I don't know if they collided. It looked like they just basically broke up in bad weather. You had one where the ship literally just broke in half. Another one, the ship was in trouble, and it looks like they intentionally ran it aground. And now there's a story this morning about another tanker that's in trouble in the Kerch Strait. Let's read a little bit here. Spilled oil has washed up along tens of kilometers of the Russian Black Sea coast after 2 tankers were badly damaged in a storm over the weekend, a regional official said Tuesday, and state media said a third vessel is now in trouble. TASS news agency said the third ship, also a tanker, had issued a distress signal off the port of Kavkaz, but its hull was still intact and there was no oil spillage and the crew was safe. The first ship, the Volganev 212, split in half on Sunday in the Kerch Strait between the Black Sea and the Sea of Azov. The second, the Volganev 239, ran aground 80 meters from the shore near the port of Taman in the strait. The ships, both more than 50 years old, were carrying some 9,200 metric tons, or about 62,000 barrels of oil in total, TASS reported, raising fears it could become one of the largest environmental disasters to hit the region in years. Just to put that in perspective, guys, 62,000 barrels of oil combined being carried by these ships. The Exxon Valdez spilled 11 million barrels of oil when it ran aground and caused the oil spill back in the 80s. So this is an ecological disaster, but it's nowhere near the scale of that. Another agency, RIA, said the third vessel was from the same aging group of ships. Now, this guy I can't pronounce, the governor of southern Krasnodar region, said fuel oil had been found along the coast between the towns of, I can't pronounce this Russian stuff, Temryuk and Anapa. This morning, while monitoring the shoreline, stains of fuel oil were discovered. Oil products washed ashore for several tens of kilometers. Now, these carriers, I was watching a video about this on the channel called What's Going On with Shipping, I believe it's called. It's a great channel. It looks like these are smaller coastal, even like river oil tankers, much smaller. They're not supposed to be operating in heavy seas in open water. So I don't think this has anything directly to do with the war. I don't think this was a Ukrainian attack, but I do think it's possible that the conditions in the Russian oil market between the sanctions and what's been going on with the war is causing these tanker operators to take more risk operating these more vulnerable tankers further from shore and in rougher seas. And that has contributed to this disaster. That's me speculating here. I don't know why these little river carrying tankers were operating in the middle of the Kerch Strait in rough weather. It seemed like an unnecessary risk. So it's possible that was contributing there. Also going on this morning, guys, we're not going to spend too much time on this. Cocoa prices climbed to a new record high, prompting fresh warnings about extreme volatility. This is another one of those commodity stories we've been tracking. There's a couple of these big dislocations in the commodity markets, and it looks like cocoa's getting worse again this morning, making another all-time high here. We're looking at hourly candles. Let's set this to daily here. Daily candles, you can see what the cocoa market has done. I mean, we're just going straight up here. Yesterday, it made a big move the day before that. You had a big die-off in cocoa crops in Africa last year that continues to get worse. It's going to take years for the market to recover. That being said, I'm pretty sure you got some rampant speculation here is contributing to this big move higher. And my guess is sooner or later, again, FOMO rally is very difficult to predict, but at some point we're going to see a pretty big move to the downside as these longs get liquidated once they overextend themselves. All right. We talked about the Nvidia story. We talked about the Avago story. Let's talk about this one coming out of the UK. I thought this was pretty interesting. A new private stock market is launching. Here's why and how it'll work. This is pretty interesting coming out of London today. The UK's financial watchdog on Tuesday outlined plans to approve a new private stock market that would let investors buy and sell shares in privately held companies in line with the British government's plans to boost the country's economic growth. The Financial Conduct Authority's proposals are set to see the launch of a new market hosted by the London Stock Exchange Group that will let institutional investors and high net worth individuals trade stock in privately owned companies through a standardized platform. The FCA is now aiming to launch the new platform called the Private Intermittent Securities and Capital Exchange System, or PICES, by May, with a view to working with market participants to develop a proportionate regulatory framework. Companies that sell shares on the new private stock market will remain private and be subject to the new regulatory framework with less frequent financial reporting requirements, for example, rather than the UK's current listing regime. The private stock market will be limited to secondary offerings with intermittent trades. The issuer will be allowed to restrict investor participation as well as set price parameters. With many companies choosing to stay private for longer, there is increasing demand for investors to be able to trade shares in private companies more easily, the FCA said. And that is the operative phrase right there, with many companies choosing to stay private for longer. Now, let me just preface by saying there's a similar exchange here in the States. There has been for years. I think it was started in 2004. So there is a precedent for this. But what they're saying here, many companies choosing to stay private for longer. I've talked about this on my channel, how private equity is dodging price discovery like they're trying to dodge price discovery like a fat kid in a dodgeball game. I mean, they're doing anything they can to find out what these companies that they're holding is worth. They're doing all these net asset value financing. They're starting new funds and putting the holdings from their old fund into the new fund and using the money from the new fund to pay out investors in the old fund. All this shell game they're doing to avoid price discovery, because with higher interest rates and with the collapse of the global economy that is ongoing, these companies are not worth what they paid for them, and they don't want to admit to their investors how much money they lost. So they're doing all these creative things to avoid price discovery. And now you've got a whole new market is springing up in the UK where these companies can buy and sell these things without actual price discovery. Because, again, all the private equity firms, they're all in the same boat. So they all know if one of us goes down, we're all going down. So it's entirely plausible that this is just another in a long line of shady tactics to avoid price discovery in private holdings. Now, also worth pointing out, yesterday, guys, we had overnight reverse repo agreements, $110 billion. That's down pretty sharply from $135 billion a day ago. Still got a little bit of wiggle room here. There's $110 billion of extra liquidity sloshing around in the system. But let's zoom out a little bit on the chart here, guys, and you can see we are way down from the highs of 2.5 trillion. And at this point with 110 billion, I would say we're probably weeks away from hitting zero. We were on our way to zero pretty rapidly last year during the debt ceiling crisis or at the beginning of this year. And then we kind of leveled off through most of the summer. And then late summer, we started to decline again. And that's been going on pretty much since the beginning of August, hitting a new low yesterday, $110 billion. Also, keep an eye on what's going on in Brazil. This is a stark contrast to what we're seeing in Argentina. On the Patreon Zoom call last week, we were talking about Argentina, about how Argentina has seen a dramatic decline in inflation, how they balanced their budget for the first time in years. But at the same time, you're also seeing high unemployment and economic contraction in Argentina. In other words, Milei is doing what he promised to do, and they are seeing a deflationary recession in Argentina right now. Now, I say that very loosely, a deflationary recession. Inflation has gone from like 300% to 100% or 160%. So you still have rampant inflation in Argentina, but it's falling very quickly. Milei has cut government spending, and government spending was the source of most employment in the country, and so you're seeing a lot of recession. Now, they're doing the opposite in Brazil. In Brazil, they're spending money like gangbusters trying to grow the economy, and now we're seeing headlines like this. Brazil's central bank says record low exchange rate is fueling inflation. And we're also seeing stories like this. Brazil's central bank steps in currency markets again amid sell-off. They're defending their currency because the Brazilian real is collapsing against the dollar. Look at this chart. This is USD BRL. First time we've ever shown this one on the channel. Look at what the Brazilian real has done in just, my pen isn't working now, in just the last couple of months here, since pretty much the beginning of this year. We're now at 6.16 real to make $1, whereas at the beginning of this year, it was 4.8. So the Brazilian currency is losing value. You've got inflation on the rise in Brazil, even as over in Argentina, they're doing the opposite. You're seeing the economy is shrinking. The inflation is falling rapidly. So just pay attention to this. You got Brazil and Argentina moving in two different directions here. I wonder what this looks like a few years from now if it continues. You got a socialist in Brazil who's trying to spend his way to prosperity, and you got a libertarian with a chainsaw in Argentina who's just basically cutting the head off the government. I know which one my money is on, but I'm curious. What do you guys think this is going to look like if it continues to play out for a couple more years? Also this morning, we got retail sales in the United States increased 3.8% in the month of November versus the same month a year ago. Pretty good retail sales numbers in the U.S. here, 3.8%. That's up from 2.8% last month. I would add that's a little bit inflationary, guys. Keep an eye on that. You got retail sales growing faster than the rate of inflation. Now, on top of that, when you look at the monthly numbers, you get some interesting hints here. Retail sales in the U.S. increased 0.7% month over month in November, following an upwardly revised 0.5% from October. The data continued to point to robust consumer spending during the holiday shopping season. Biggest increases were recorded in sales of motor vehicles and parts, 2.6% month over month for motor vehicles. So here's your retail sales numbers, up 0.7%. And the biggest contributor to that was vehicles. Now, you guys may recall the last time we got a CPI print, what was it, middle of last week? We noted that there's been a big increase in auto prices in the last couple of months. The numbers year over year are still negative, but we're starting to see auto inflation again. Used cars and trucks are going up. New vehicles are going up. Now we're seeing a big surge in buying in the retail sales numbers. Now, look at this number if you're not convinced, right? First of all, 0.7% month over month. But when we do X autos, when we strip car sales out, retail sales X autos in the United States were at 0.2% month over month in November. So 0.7% when you include cars, 0.2 when you take out cars. Almost all of the growth in retail sales in the last month has been in the auto sector. Car prices look like they're heading higher again. I don't know if this is because all the auto dealers are cutting back production and they're limiting, but you know, we've seen the inventory was really high at all the dealers. I don't quite get this increase in car prices, to be honest with you. Maybe it's the fact that the average car on the road in the United States is now so old that they're just dying and people have no choice. They got to go replace their cars. But almost all of that growth in retail spending came from the auto segment. And I just want to say thank you very much to Grandpa, who says sound is off. Thank you, Grandpa. Thank you, guys. I'm sorry I was talking to myself for like 6 minutes to start here. And it wasn't a tech issue, guys. I had my soundboard. My mic was on mute. That's why it was a silly mistake by me. And yes, I did a mic check. I thought it was all working, but it just didn't. Gone Fission says no sound too. Thank you. Also, shout out to M&J, who tried to give me a heads up that there was no sound as well. And I'm sure I got messages from Mish. I got messages from my cousin. I got messages from everybody saying no sound. Thank you, guys. Appreciate the warning. Hunt and Cover says, here's for Gigi's sign language lessons for backup. All right. That's on me. I'll take that. Thank you, Hunt and Cover. Appreciate the support of the channel, guys. Let's see. Armando Reyes says, The world is falling apart. Mic issues, beef shortage, decaying tankers, expensive chocolate milk. You forgot to say dogs and cats living together, mass hysteria. Is there no end? Pray, people. Look, let me just say the world is going to hell in a handbasket, Armando, but in the last couple of weeks, let's think about some of the stories we've seen. We've got the South Korean president finally lost his impeachment vote, so it looks like he's going away soon. We've got Macron is on the ropes in France. His government fell apart. You got Olaf Scholz lost his no confidence vote yesterday. His government is falling apart. You've got rumors that Justin Trudeau might be resigning after a little bit of a spat with his finance minister. All of these globalists are falling apart. They're losing power right now. Globalism is crumbling before our very eyes. Now, that's not all a good thing. There are some very few good things about globalism. But at the very least, all the people who have made the world so miserable for the last couple of years, their careers are in the toilet. They're all losing power. So maybe there is an end near. I mean, things typically get worse before they get better. But at the very least, all these WEF guys are losing their jobs. So that's got to be a good thing, right, Armando? Thank you again, Armando Reyes, for supporting the channel. Thank you, Steve Woitis says, Canada's finance minister resigned yesterday. One wonders just how bad government finances around the world really are. And look, Cynthia Friedland, whatever her name is, good riddance to her, all right? I mean, I cannot stand Cynthia Friedland. I can't stand Justin Trudeau for that matter. I mean, both of those ladies can just go piss off for all I care. But at the same time, one wonders how bad government finances are. Supposedly the reason she's stepping down has a lot to do with disagreements over tariffs, that Trudeau is not taking it seriously enough. Trudeau basically threatened to demote her, and then she's like, F you, I quit. Look, government finances around the world are awful. This generation, the prior three generations, will probably go down in history as just the most irresponsible people in the history of the planet. I mean, we have sold our kids up the river for quality of life in the short term. It's going to come at their expense. And so at the very least, we're starting to see these people lose power. The problem is we have not yet, with the exception of Javier Milei, who's really the only person in the world right now who has taken the issue of government debt spending seriously, there is nobody stepping up to the plate who is actually willing to cut spending yet. All right. Trump has sang a great tune about that. He's promised he's going to do it. We'll see if he delivers, because he didn't last time. Last time Trump was in power, he said he was going to cut spending and he increased it. All right. So let's see. Maybe the worst is behind us. I hope it is. But again, you've got one guy, Sideburns down there in Argentina. He's the only one taking this problem seriously, in my opinion. And I hope there are more like him. Thanks again, Steve, for supporting the channel, sir. And thank you to M&J says, it's just me begging for subs and crack that 60,000 before 2025. Well, my sound issues aren't going to help with that one, M&J. But yes, thank you so much to my 59,900 and change subscribers. I appreciate that very much. And to you next 60, 70 or so out there, thank you for getting me above 60,000, hopefully before Christmas. All I want for Christmas is 60,000 subscribers, that and my two front teeth. Thank you, M&J, for everything you do for the channel. Thanks for trying to warn me about the sound this morning. And thank you, everybody, for having your coffee with the melon heads. I apologize for the blankness for the first few minutes there. We'll fix that for tomorrow. Thank you to my moderators for everything you guys do for the channel. Thank you guys for the super chats. And to my magnanimous melon heads on YouTube and Patreon. Thank you guys for everything you do for the channel. Till next time. Hi, Mom. Hi, Dad. I love you guys. Live small and dream big.